free money for some, but not for others. Because whenever there's somebody selling, somebody else is buying. Is it the altcoin season, or are we exit liquidity? Welcome back to the CryptoFather channel. Today is the 24th of July. We're going to look at the markets. We're going to look at the charts. We're going to look at reasons for why the market's dipping today again. We're going to look at some Solana predictions and some other articles in today's video. So please make sure to smash the like, subscribe to the channel, pick up a Descent wallet. Don't forget to pick up a copy of Crypto and Millennials on Kindle. And let's get crack-lacking with this show. The market cap is at $3.8 trillion. We are seeing a nice $100 billion dip since yesterday. Yesterday, the market broke above $4 trillion. And right now, it's back down to 3.895. The trading volume has remained pretty much the same at about $227 billion. Pudgy penguins are still on the trending list, despite the fact that it's pulled back about, it was 4%, now it's 3.5%. So maybe we're seeing a little bit of a recovery. Bitcoin is at $117,000. Ethereum dropped down below $3,700. Unfortunately, BNB 757, Solana dipped below 200. So that 200 that it created, it didn't sustain it as we hoped it would. Cardano is below 80 cents. Everything's in the red today, unfortunately. Bit of a red market. We'll see how long that's going to last. It might revert within the next couple of minutes and be back in the green imminently. And $109 on Litecoin. And as always, quick look at Meowcoin. Meowcoin is at a market cap of $511,000. It's a price tag of $200,067. Looking at the charts, Bitcoin is forming a candle on the weekly. Let's go on the daily. On the daily, it's moving sideways along the channel that I talked about. Over the past 2 days, it's created basically trending sideways between the Fibonacci resistance at 121,000 and the support at 117,000. That's Bitcoin for you today. Ethereum has retraced back to the lowest of the three resistance lines that I talked about. So we had a candle, then it formed a bearish hammer candle and a massive dip all the way down to the $3,500 level. So this was the resistance, and I guess hopefully this will hold, and then we'll see another breakout for Ethereum. So basically the projection from before was from a bullish flag. This was the projection. It managed to get up there and above, and then now retraced to this. So this should be a test of this level, after which we should see a takeoff on Ethereum to higher highs. ADA's doing something similar. It retraced back to the 75% discount, and this candle on daily still has 2.5 hours left. So we'll see what the next candle will bring, whether it's going to open between 84 cents and 79 cents, or if it's going to jump back up and open another candle, a daily candle above this 86 cents Fibonacci retracement level. Actually, that's not a Fibonacci, that's the highest point most recently. So we'll have to see what happens with that. The market slide amid Trump trade shocks. The Trump trades are still a thing. There's still a bit of uncertainty. Today's market downturn is partially driven by uncertainty following President Trump's recent trade announcement. On Tuesday night, Trump announced on his social media platform Truth Social a major trade deal with Japan involving a $500 billion investment. We just completed a massive deal with Japan, perhaps the largest deal ever made. Japan will invest at my discretion $550 billion into the United States, which will receive 90% of the profits, Trump claimed in his post. This deal will create hundreds of thousands of jobs. There has never been anything like this. So all good for the States. Why are the markets dipping? The president also added that Japan will open their country to trade, including cars and trucks, rice, and certain other agricultural products and other things, as well as pay reciprocal tariffs to the US of 15%. Earlier today, Trump said that he would only lower tariffs if a nation agreed to open its markets. If not, much higher tariffs. Japan's market are now open for the first time ever. USA business will boom. So that's good announcement. That's some good news, right? XRP wipes out massive 20 billion in a day after bizarre SEC ETF decision. Apparently, the SEC is not happy with XRP and its ETFs. This is the exit liquidity that we're all talking about. So it's free money for those who are making the liquidations, and those who are getting liquidated. Obviously, those are the ones who are providing exit liquidity. But the XRP market's capitalization has plunged almost 20 billion amid rising regulatory uncertainty and broad market turbulence. Notably, the market has dropped by 18 billion within 24 hours, falling from 208 billion to 190 billion. The sell-off was amplified by an extreme liquidation imbalance where 37.85 million in long positions were liquidated, which is massive. Imagine $37 million just lost. I mean, this is not compared to some other liquidations that occurred in the past, this is nothing, but just put that into perspective, right? Compared to just 360,000 in shorts, a 10,000% disparity. This sharp imbalance triggered forced selling, revealing the market's overexposure to bullish leverage, obviously, because the markets are heating up. Everyone is hoping for the big bucks, for free money to flow into their pockets. The drop was further fueled by a sudden regulatory reversal where the Securities Exchange Commission abruptly halted the conversion of Bitwise's 10 crypto index fund into an ETF on July 22nd, which would have included XRP. The move came just hours after the SEC's Division of Trading and Market granted initial approval. The fund is heavily weighed toward Bitcoin and Ethereum, while the remainder allocated to altcoins such as Solana, XRP, Cardano, among others. It manages over $1 billion in assets and is rebalanced monthly. So it seems to me like the SEC is playing with the markets. There are announcements coming out that the SEC is going to approve this ETF and that ETF, and staking is going to be allowed, and the SEC says nothing. But then they turn around and just, don't approve the ETFs. So maybe it's not SEC's fault, but the media that is trying to boost everything. And of course, this is what happens when things go southwards. SEC Division of Trading and Market has approved the Bitwise 10 Crypto Index ETF. However, like with the Grayscale Digital Large Cap ETF, this approval order is stayed. In my opinion, both of these should be allowed to convert uplist ASAP. Crypto markets' faith hangs on the last day of July. What's going to happen on the last day of July? Traders say the real test will come in the last day of July when an unusually dense cluster of US macro policy events collides with an intensifying legal battle over President Trump's tariffs. The last few days of July will set the stage for markets for the rest of the year. FOMC meeting where dovish descents are looking very likely. QRA meeting where we will get a look into how willing Besant is going to be to try to weaponize Treasury issuance for the first time since being chair. Tariff letter deadlines. The Supreme Court will begin deliberating on whether tariffs via executive order are legal or not. No big edge on neither side right now personally. We'll just react once we get clarity. The two-day Federal Open Market Committee meeting on July 29th and 30th is the first shot. Governor Christopher Wallen, speaking last week, laid out the case for an immediate 25 basis point rate cut, arguing that tariff-linked inflation looks temporary and that the labor market is under strain. So they're hoping for a massive rate cut towards the end of July, but you know how it goes. We'll have to wait and see whether that's going to happen or not. UPower and IO Techs partnered to tokenize real-world assets. There is a talk of tokenization, and all of that is driven by Ethereum. Whether it's run on Ethereum or not, basically tokenization is occurring thanks to Ethereum, because if without Ethereum, there would not be Avalanche and there wouldn't be any other blockchains. Although, I mean, they probably would have come around, but Ethereum was the first one. If it hadn't been for Ethereum, probably somebody else would have had invented Ethereum or something like Ethereum, another blockchain. Maybe in another parallel universe, there is another Vitalik who's not Vitalik, but some other dude. UPower Limited and IO Techs confirmed on July 23rd in a memorandum of understanding the collaboration of tokenized real-world asset, including AI-driven innovations. This partnership could transform financial structures in the smart grid and transport sectors, although specific financial details remain undisclosed. And so when we're talking about tokenizing real world assets, we're talking about real estate, basically people being able to purchase chunks of real estate on the blockchain. Essentially, you instead of I guess you could buy it like shares of a building or parts of a building. You no longer need to own an entire property. You could just own portions, which is very weird, but I guess, I don't know, you just own the value of it. That's just one tiny example. But in any case, the tokenization of real world assets would just create another loophole to create more money. And a lot of that free money may be scooped out by the plebs, by people like us. Most of it will go into the pockets of those doing the tokenizations, releasing the tokenized assets, and creating platforms that will allow people to trade and buy and sell these tokenized assets. ApeCoin versus Pengu. Who's winning the NFT token war in 2025? So that's interesting. Ape, the Bored Ape Yacht Club was the biggest NFT seller in 2002, I guess, 3, 4. And Pengu is being compared to it. So that's huge. Time may be ripe to pick up some Pengu, pick up some NFTs if you can afford them, but definitely stash up on your Pengu coins or tokens, because we might see a massive blow off top for the Pengu ecosystem, for the Pengu coins or tokens. Pengu is leading with retail hype surging 70%, a booming toy sales, social buzz, and ETF speculation. ApeCoin is staging a quiet comeback with Ape Chain Banana Bill incentives and potential developer adoption. Pengu brings speed and hype, while Ape offers long-term utility and deep brand roots. Both are real contenders. If you got the cash, pick up both. If you don't, I would say Pengu might be your better bet because it's the newer coin. And Ape, the apes have had their time, and so I think a lot of new money will go into Pengu because that's just how it goes. The new take this is the new thing, and this is what's going to boom. Not to mention that it's at a lower price point, which means that the entry is a lot cheaper, a lot lower, and the potential gains are a lot bigger because it's a brand new coin. Ethereum whales, 1.7 billion exit from Aave triggered staked ETH DPEG. That's no good. Over the past week, a whale, likely Justin Sun, withdrew 1.7 billion in ETH from Aave, driving up borrowing rates. The move disrupted staked ETH leverage loops, triggering deleveraging and a 0.3% staked ETH DPEG. As borrowing became expensive, DeFi users who relied on leverage staking strategies began unwinding positions. One of the hardest hit strategies was the popular staked ETH leverage loop. Charts show that staked ETH DPEG'd from ETH sharply before recovering. Users typically deposit ETH, borrow against it, buy staked ETH, and repeat the cycle to earn staking yields. However, higher borrow rates and a weakening staked ETH peg made this strategy unprofitable. As loopers began to exit, many rushers to freedom staked ETH for ETH. This created congestion in the staking withdrawal queue, which currently takes about 18 days to process. With any staking and any farming, you have to keep in mind that there's a locking or unlocking time, unlocking period. So in this case, it takes 18 days. But so this is kind of a warning. $1.7 billion withdrawal can create problems on a larger scale. So this is another pitfall of DeFi. When a whale withdraws a massive amount at one point, obviously this is what happens with the market. So that's still something that DeFi, I guess, has to wrestle with and figure out somehow, because that doesn't really build confidence in investors when any minute an entity with a large position could simply withdraw their money and cause havoc and quite possibly, lead to the loss of money. White House to release crypto report July 30th with a potential Bitcoin reserve disclosures. Trump's 180-day directive nears completion, with proposals likely covering a strategic Bitcoin reserve, stockpile, and crypto regulation. Bo Hines confirmed the July 30th release of the White House's digital asset report, which may detail Bitcoin reserve plans. And Eleanor Terrett reports the document could also recommend national security and banking access reforms for crypto firms. So this is another thing to expect on July 30th. So we've got this possible announcement of rate cuts on July 29th and 30th, and now we've got the announcement of Bitcoin reserves in the United States by the White House, all coming on the 29th and 30th of July. Someone's scaring all old Bitcoin whales to move their coins. Ancient whales may be moving their coins as a precaution due to dust transactions containing threatening messages. Even the wallet of James Howells has been targeted, despite the fact that the 8,000 Bitcoin are on a hard drive buried in a landfill. The messages claim ownership or try to set a deadline for moving coins, but no third party can control the wallet without the private keys. The recent price records for Bitcoin coincided with a wave of old whales moving their coins. Some suggested that this may be a drive to take profits, but there may be another reason, as more old whales are dusted with transactions containing warning messages. And these dust messages, I guess, are coming because the United States announced just a little while ago, especially I think California, the state of California said that any dormant account or any dormant wallet will be seized. So the government reserved the right to seize any wallets that have been dormant for a, I don't know, period of 3 years. And so I guess scammers are now messaging these wallets in order to get them moving. These could be scammers or it could be legitimate messages, but the point of it is to get these wallets moving. If these are phishing attempts, then obviously people clicking the links or clicking the messages would be screwed, allowing access to their wallets and seeing their entirety of their crypto stash being drained. Howells has been given a deadline until September 30th to prove ownership. One of the messages even read, "We have taken possession of this wallet and its contents." Unless the sender managed to unearth the hard drive and revive the old wallet, the messages remained meaningless. And so, yeah, that's scammers for you. So what this will be a good thing to keep track of and see what happens at the end of September. Empty words go in the wind, or will that wallet be actually drained? Fate of crypto CBDC bills unclear as US Congress heads into a recess. Lawmakers are expected to break in a matter of days, but there are still items on the legislative agenda to address, including 2 crypto bills passed by the House. So despite the bills being passed, there's still debate on clarification on how to exactly proceed with these bills, with these acts. And once again, that's going to take some time, hopefully not past August, because if they drag it out until the end of July and into August, then recess comes in, I guess. Closed doors for the gov, everybody's on vacation, and nothing new over the month of August. We could see a red August once more. Senate AG committee to release CFTC crypto draft in September. So there you go. We could see a red August quite possibly, and nothing more until the month of September. CFTC guidance will define regulatory boundaries. Senate Agriculture Committee will release a draft in September to explain the CFTC's role in regulating digital assets. The draft will work alongside another bill from the Senate Banking Committee. Lawmakers want to finish the full crypto framework by September with support from both parties. So it's going to take another couple of months to figure out who's in charge here. Is it the SEC or is it the CFTC? Both of these government factions are fighting for cut a fair share of the market, for regulating it and busting up the bad actors, as they call them. And Solana's target, $450 target, gets bold confirmation as pundit predicts massive pump amid Sol corporate accumulation race. In a July 22nd post on X, a crypto strategist going by the alias whatever noted that Solana is ready for a massive pump and could smash $400 to $450 in this run. The bullish forecast comes amid major corporate accumulation. DeFi development, a Solana treasury company formerly known as Janover, is now just one token away from crossing 1 million Sol in its treasury after its latest 198 million buy, as reported by ZY Crypto. The Nasdaq-listed company acquired 141,000 Solana between July 14th and 20th, growing its treasury to 999,999. Wow. Apexia, brand owner and that specializes in supply chain management, also disclosed recently that it had snatched up an additional 100,000 Sol. Both companies have staked all their acquired Sol tokens in a bid to generate yield. Meanwhile, Bitcoin mining company BitMining made a strategic shift into the Solana ecosystem earlier this month with plans to raise up to 300 million to build a sizable SOL token treasury. So there's companies getting in on SOL, and this is why the prediction for $450 for Solana. Some people are talking about $1,000 Solana, which may or may not come, just like everything else in this space. Smash the likes, subscribe to the channel, pick up a Descent wallet. Remember to pick up your very own copy of the Crypto and Millennials book, $11 on pre-sale and pre-order on Kindle. It's ready now. It's full of information. It'll open your eyes to the future of cryptocurrencies. If you still are unsure of what cryptocurrencies are and why they're here and why they're important, then this book is for you. It's definitely a worth read, and it is $11. It's not gonna make you any dumber. It'll definitely make you smarter and a lot more knowledgeable about crypto. So get that. Get a Descent wallet, stash it. All the ref links are below the video. $30 discount on this on one, and if you purchase two, you get a $99 discount. Ref links below the video. The like button is right in front of you, so click that, subscribe, and have a fantastic Thursday. I will see you tomorrow on a Friday. Peace.